For more on overseas markets, we're joined now by Ashraf Laidi. He's Chief Executive Officer of Intermarket Strategy, and he joins us from London. It's good to see you again, Ashraf. Thanks for making time for us. Let's talk about the pound sterling. It's significant rally against the dollar today. There's talk of a fat finger trade, and certainly when I look at the intraday graph, I see a big spike in the middle of the London day or early in the London day. But there's other factors at play as well. What are your thoughts on the London pound, on the UK pound rather, and what it's done today?
Yes, Paul. You know what's funny about this? This is the first time that something goes up and not down, and they say the reason to it is fat finger. Usually fat finger, and I said that with a wink. I don't know if you can see me from overseas with that wink. But usually when something falls, they say it's fat finger, but then again, it's currency. So, the sterling went up, so probably when the dollar went down, fat finger. Nobody was able to explain it. The liquidity was very thin. Nobody was able to explain it, so they said it was fat finger. But one of the opinion polls actually did not make a retraction, but it showed a more favor for the remain than the exit. A few days after, I think it was the ORB, after they showed the wide lead by the by the Leave group. I think that this conversation, these questions, they're going to become the norm until June the 23rd. And this dance of the opinion polls is going to continue, and the volatility of the British pound is going to become higher. It's even higher than the period leading to the Scottish referendum. This shows you how so important this is. And so I think we're going to continue to see more changes and more, more of the same in the pound against all of the currencies and not just the dollar.
Does the weak jobs number in the U.S. on Friday magnify the volatility that we'll see in the short term in the pound?
Well, maybe, yeah. I mean, in the sterling-dollar exchange rate. But if you're a sterling-dollar trader and you see a disappointing number in the U.S. and you're going to not get carried away in buying the British pound above the, above the 148 level, let's say, or 149 level. So, oil went up. The Canadian went up yesterday, today and yesterday. So the sterling fell against the Canadian dollar. But then we saw the sterling pushing back up. So I think if you're a trader in a sterling, you're going to be operating within quite tight constraints.
So, Ashraf, I mean, if we're on hold till June the 23rd, and then beyond that, we still have issues with the Spanish and the Italians wanting a referendum on in or out. I mean, what are the catalysts for the European markets in general to move higher, or at least the euro and the pound to eventually break through some volatility in a trading range?
Yeah, John, I heard you speak about the Toronto Stock Exchange and the performance, how it's pushing higher. I think the first thing that people look at in explaining the outperformance or the rally in, European stocks, I don't think it makes sense for us to only speak about European stocks and to ignore. I think global stocks are moving in unison. I think the expectation that the European Central Bank is going to be buying not only bonds, but corporate bonds, not only government bonds, but corporate bonds, this is helping sentiment. Last year they were buying bonds, the government bonds. Now they're buying corporate bonds. Tomorrow they're going to be maybe buying warrants, hybrid corporate stocks. The question is, when will the Fed and will the ECB start buying stocks? It may sound a funny question, but it was also very funny when we were asking 8 years ago whether U.S. interest rates were going to 0%. I think here's the thing: we look at this divergence between you've got the stock market, the S&P 500, dollar versus the yen, and yields. Usually these move in unison; they move together. Right now, what we're seeing yields going down, dollar yen weak, and U.S. stocks pushing higher. As the more that divergence widens or extends, the more it's likely going to be brought back by a shock. Would it be a dollar shock? Would it be a yield shock? Would it be a stock shock? That we'll have to see.
I'm looking at your Twitter feed on my screen, and I noticed this morning you've referred to the Canadian dollar as leading the foreign exchange pack, and I believe you're saying that you've closed out one long position on the Canadian dollar but kept another one. Just give us your thoughts on the Canadian dollar right now.
Yeah, when the dollar was pushing higher, above 130, we actually sold dollar CAD 131. And I think that, it is not just a blind bet that oil is going to go to 55. Oil does not have to go to 52 for the Canadian dollar to push higher. I think if Polos was able to hold off from not cutting rates when things were so bad in January, unlike last year, if he was able to hold off, then I think this really speaks about, some steadiness and robustness in Canada. Obviously, the question mark is the job report in Canada this Friday. But I think that the Canadian dollar still has ways higher, and I think it's going to outperform its commodity currencies, sister currencies, the Aussie and the New Zealand dollar.
Ashraf, thanks as always.